welcome to Crypto Disrupted. I'm your host, Trent Lipinski, and I'm here with Eric from Reality Shares. Hey, Eric, how's it going? What are you working on?
Great, thanks for having me on. So Reality Shares itself is an ETF issuer, and what that means is exchange-traded funds. So we have 6 publicly traded funds that exist on the stock exchange, either on the NASDAQ stock exchange or the New York Stock Exchange, that people can invest in a whole basket of stocks with a single ticker. What we recently launched is the China Blockchain ETF, which we're pretty excited about. China is growing, massively when it comes to just their overall economy, but also blockchain investments. And we really wanted to build something that people could invest in without having to figure out which companies are doing what and which. And when I say blockchain, I'm talking about the technology. So these are all the companies that are building out technology that are publicly traded. They trade on a stock market, but they're so not necessarily cryptocurrencies, but actually blockchain related businesses.
And these ETF funds, so they're portfolios of different blockchain companies, or how does that work?
Yeah, so we have 2 ETFs that are blockchain focused. One is BLCN, and that one is a global ETF. So it looks at all of the companies around the globe. And then, what we did was we invented a blockchain score. So we score each company in the globe, basically, on a blockchain score. And 7 different factors we look at. So the number of patents that they've filed, how much are they doing in the business? Is the product just in pilot stages? Are they actually generating revenue from it? And we score it across these different categories and come up with a score. And for your listeners, if they want, they can head over to investinthechain.com, where we list all of the different companies and then their relative score. And then we select those top companies with the highest score and put them into a basket. And then we've created a ticker that so they can buy it with a single, just like a stock, it trades that entire portfolio or basket with a single ticker. And then that was the global one. And then BCNA, like B China, is the newest one. And that one's only Chinese companies in that portfolio.
And how do investors participate? Is there a marketplace? Do they have to go to your website? Are these tokens? What's the mechanism there?
Yeah, so what's cool about exchange traded funds, and they've been around since the early 90s, they're really, they're stocks that trade on the stock market. So They trade the BCNA and BLCN both trade on the NASDAQ stock market. So if you have a brokerage account with either, anyone really, Schwab, TD Ameritrade, Robinhood, any of those brokers, and you can just go in and buy these stocks that trade on those stock exchanges. That's cool. It was like an early, it was almost pre-crypto, but in a way, right, you can tokenize something, and this is really like securitizing a whole basket of things. So I think the next evolution will be tokenizing funds. Instead of trading on a stock market, they can trade anywhere on the blockchain.
And then there are also global markets at that point, instead of being limited to, time markets. And, now you've got the global opportunity to participate, at any hour during the day as well.
Totally.
And I think 2019 is going to be really the big year of like the regulated security tokens, and, even real estate backed, tokens and different asset. I think we're going to see a lot of different asset classes. And we're going to see them tokenized.
Absolutely. We're like so excited about what blockchain can bring to just society in general. It just takes so much friction out of the system. When we think, because I've been in the securities business for probably 20 plus years.
Yeah. Can you go into a little bit of your background? Because you've been on Wall Street and involved in a number of things for quite a while.
Yeah, so I started at Morgan Stanley back in the mid-90s. I went to school for computer science and finance, and then kind of chose that finance path. But I've always been really passionate about technology and kind of innovating and creating good systems for investing. And I kind of applied those same computer science principles towards investment process. We would invest a lot in hedge funds and private equity and these things that weren't available to my neighbor or to my mom. And I always kind of pissed me off. It was that why can't we create investable products that anyone can invest in? Why is it just that the wealthiest people could get access? And the exchange traded fund was a good example of that, where you could really take these great strategies that were institutional in nature and put them into an exchange traded fund and make them at least accessible to people who had stock and bond account, like stock market accounts. But they still had to have a broker and they had to be custodied. And then now kind of along comes blockchain, to where now these brokerage firms are really wondering, gosh, am I going to be able to keep all these customers? Because they don't need me anymore. They no longer need a central authority to store all of their wealth. And that's really what kind of excites me, is it even just further elevates that next kind of evolution of getting great things to individuals and cutting out the middleman across there.
There's still custody issues and a number of challenges, though, that as an industry that, definitely have to be solved for still. But can you tell us
20 years out, we've got a huge boom ahead of us, and wild to watch it all play out, I think.
So can you tell me a little bit more about Reality, what you're working on with Reality Shares and your company and the solutions you're working on?
Yeah, so so with the ETF business as a whole, with Reality Shares, so we launched these 2 blockchain related and focused ETFs, and then we have 3 or 4 other ETFs that are more focused on kind of the traditional stock market world. And then in where we're going from, we also have a venture capital and a hedge fund that invested in some pre-ICO, some very early stage deals. And in the you may be familiar with the Telegram ICO that was made big news, and so we have a fund that invested in that, participated in that on an early stage deal. And then we're building out that hedge fund to be accessible on a securitized platform, like a security token type structure. And then in between there, we're also working on some other projects that are going to really make crypto investing kind of accessible to all and on a portfolio basis. And we're pretty excited about that. We can't announce too many of the details, but just when you think about the firm and think about kind of what our internal DNA is, it's all about really accessibility for one, and then creating cutting edge, innovative solutions that people can invest in those kind of far out asset classes that are of the future.
And are you looking primarily at retail investors? Or are you looking at accredited investors that you're building solutions for? Who's kind of your audience?
Yeah, so across that spectrum, you have the exchange traded fund business, which is available to all retail investors who have a stock or bond account. The minimum share price on our ETFs is about $20, $25 per share, and you can buy one as little as 1 share if you have a brokerage account. That solution in the middle that we haven't announced, but we've been working really hard, and we hope to make some announcements in the fall here. That one is for retail investors. And they'll be able to invest in portfolios of cryptos, and it'll be available again for all. And that one, very excited about. The hedge fund and venture fund business, just because of the nature of it, we had to go with a more traditional accredited investor, what's called qualified purchaser, so institutional type approach there. But we, today, that's the way it's structured, but over time, we hope to work with the regulators, because we're a fully SEC registered, FINRA registered, and we have every regulation under the sun. So we want to work with them in order to create that so anyone can invest in those types of products. Again, kind of with that same DNA of I want my mom, I want my neighbor, I want everyone to be able to invest in great asset classes.
And what are your thoughts on kind of the current, where we're at right now in terms of regulations and, what you're seeing, like the SEC, issuing that, Ethereum and Bitcoin are in fact possibly, utility tokens. What are your thoughts on, what's happening with some of the regulations and where we're at right now?
Yeah, well, let me first break it down for a lot of customers, I think, or people, I think, who haven't experienced regulation before. They haven't really understood the SEC and the CFTC and all the different governing bodies and how this big debate is. Because people have been investing in private companies and private enterprises and private commodities for years, right? Since the earliest days of society. Yeah. So investing isn't a forbidden fruit. It's just in the 20s and 30s, there were the 1920s, 1930s, there was an awful lot of scams that were, people were just robbing people blind. And so the SEC was developed to create this solution where customers could not or you couldn't take money from a customer without doing two things: disclosing, all the risks,
Yeah.
and then basically, providing good service. So you couldn't commit fraud, and you had to have adequate disclosures. Those were really the two principles: is don't screw people over and commit fraud, and tell them, the risks of what they're doing when they invest. That's the basic framework of all the SEC is trying to get after, and the CFTC. So then now fast forward to kind of today with blockchain and crypto, anyone can invest because it's so easy with the internet now to communicate to the world. And so there were a lot of companies that were just taking in people's money without disclosing all the risks, and without maybe even, there was some frauds out there. And so now the SEC is saying, well, hold on, you can't commit fraud, and you got to disclose, and you got to let us know if you're trying to raise money, because we want to be able to watch you and make sure that you're actually disclosing things appropriately. That is all the SEC is trying to do here. They're not trying to stop innovation, and it's really cool to see them how they've like backed off, and they've let this thing play out a little bit instead of just cramming down and saying no more ICOs, no more anything. They just say a lot of these ICOs are probably securities because they're raising money from people, and so these people should disclose, and they should also, not commit fraud. And that's, I think, just a great approach here is to be, regulated, but not oppressive in terms of just stopping innovation. Because, we don't want, we got our chance with the internet, where our government really allowed the internet to flourish here in the States, and we saw all that innovation from that. If they stifle this one, they could kill it, and it goes somewhere else and into another part of the world. And I don't think they want that any more than any of us want that. I think it's going to be harder, as you try to determine 1,500 different capital raises and 1,500 different ICOs and 1,500 different blockchains, but I think they'll get through it. The idea of security versus non-security, that utility, type security versus, I think just basically think of it, if you're raising money and it's for the benefit of earning a profit, then you're probably selling a security. That's the Howey test they talk about oftentimes is that's two of the fundamental tenets is if I'm a centralized party and I'm raising money from people and I'm telling them that they're going to make a profit by investing, then it's probably a security. Now over time, as it gets more decentralized, then it's no longer really a security. That's kind of the case why they voted on the Ethereum the way they did. So I don't think it's scary. I think it's in fact good.
Yeah. And with Ethereum, a lot of people forget, like, Ethereum is not a currency. It's really, it's how you pay for compute. So, really those tokens, the actual, Ethereum itself is, it's a mechanism to be able to process smart contracts, and you're paying the gas fees to actually be able to do processing. And because really what Ethereum is it's a decentralized computer. So unlike Bitcoin and some of the other cryptocurrencies, it's an actual computing platform. So I definitely see how Ethereum is more of a utility and less of a currency and less of a security than some of the others. With that said, there's plenty of ICOs that are just straight up securities, and they don't really have a utility function, or they're baking tokens in and they're trying to create some type of utility token, but it's not necessary for the platform to function necessarily. So they're just kind of trying to bake it in so that they can say, oh yeah, we're blockchain. Oh yeah, we've got a token.
Yeah, I was thinking about the more interesting one would be like a Binance. So Binance raises money, and that money is useful. It's like you can pay your fees for their service, right? So, but it was a capital raise. It allowed the company to create the business and to really grow the business or do whatever they did with it. So how do you view that if you're the SEC? I think you probably say, day one, you raised money to help you grow your business, but that money or the tokens that were issued, on behalf of that were ultimately going to be used to pay fees and revenue, and there was some utility value in there. Yeah. So follow all the rules, make sure you make disclosures and make sure you don't, run off with the money. But then once it's out there in the public domain and people can use it for that utility, then now it should be thought of as a utility on kind of an ongoing basis. So I view some of these things can be like as they can change over time. They can become more utility-like in that example.
Yep, absolutely. And thank you for your input on that, given your experience on Wall Street in the industry. So let's get back to your product and what you're working on here. So, can you kind of break it down, like what, for like the average retail investor that you're potentially targeting, especially with some of the stuff you're working on? I know you can't go into too many details yet. Can you just talk about the advantages of, being able to invest in these portfolios and different funds and looking at, not just investing in one ICO, but actually investing in the blockchain industry itself?
Yeah, and so your audience is probably pretty sophisticated in this regard, but this is something I tell to a lot of new people to blockchain is they don't understand it. Is a blockchain is a technology, just like the internet was a technology. Bitcoin is kind of the first killer app that was built with that technology, and just like email was the first killer app that was really built on the internet. So cryptocurrencies as a whole are an awesome, cool asset class, and I even call them crypto assets because there's currencies and then there's utilities and there's all these different use cases there. But the technology itself, the blockchain technology, is really a compelling technology for companies like IBM, and IBM has built out an entire supply chain management. So now Walmart, Walmart loses billions of dollars a year in food spoilage because of food poisoning outbreaks. They have to take everything off the shelf. So if a mango is a cause of a food poisoning outbreak, they have to take every single mango off the shelf. Versus now, with their work with IBM, they can just look up in 10 seconds. They can tell exactly where that mango came from, and they can take just those different mangoes off of each store's shelf because the blockchain was able to track it all the way back from that farm in Guatemala to the truck, to the shipping port, to the customs, and so on. So that's really what we wanted to build at first, was a safer way, like really a way for people to invest in those companies that are selling the picks and the shovels and building out the infrastructure, kind of the more safe way to play this blockchain innovation and revolution. And that's what we did with our exchange traded funds. So there are these portfolios of big publicly traded companies that are using blockchain in their business in order to generate revenue. Old-fashioned, kind of, in a way, companies that are becoming more modern and new. And you'll find companies in there like NVIDIA, who's selling the chips to the mining, that's used a lot in mining. So NVIDIA is making a lot of revenue from a lot of this cryptocurrency mining, but that's kind of possibly a safer way to play it than actually buying Bitcoin itself or Ethereum in that case. So those are our blockchain-related ETFs. But I also believe that this is going to be such a big potential asset class that you want to be invested in the cryptocurrency itself with a small portion of your wealth or your income. And you don't just want to pick the winner today because it's just too hard. It's like if you'd have invested in Yahoo back in the early days of the internet thinking like they were the dominant player, you didn't even know about Google. Google wasn't even around, and they didn't even go public until 2004. So how can you participate in the whole basket? Well, if we could build a portfolio to where with a single click, people could buy into that whole portfolio of cryptocurrencies, then they don't have to think about which one's going to be the winner and which one's not going to be the winner. And that, I think, is the big problem right now that needs to be solved to make it easier for people who don't quite understand it, but they do want to invest in it, to get access to that market.
And are you seeing this more as like long-term investments or these shorter-term investments?
Long-term, and it's fun to trade, and every person, and I almost like every single one of my new employees, and I've been in the business for a long time, and I would always encourage them to trade their brains out, blow themselves up, figure things out, learn that they're not God, and they can't outsmart every market, and just ultimately kind of come to that conclusion like, okay, here's my philosophy. I'm going to basically bet my long-term investments and buy a portfolio, hold it, change it every once in a while, modify it, average, dollar cost average, like invest every month, even if it's a small amount, because when it's volatile, like, if you're buying a little bit each period, you're buying less when it's high, more when it's low, and you really end up making a lot of money even if it stays flat in that whole time period, because you bought more when it was down and less when it was up. And then trade a little bit, because there is a recreational aspect to this, and trying to pick the next winner and pick the, and have fun trading and trying to figure out a system. And so that I really enjoy as well. And I think that can either add to the portfolio, but as long as you do it right, as long as you don't do it with too much of the wealth, because that can just cause so much stomach acid and it's not worth it. and then also, I think a lot of people, they give up, and then they're not there for the big run, because they traded and they said, I'm no good at this. And so they just walk away, and then they miss out on the huge upside. So yeah, have money invested, have it in a portfolio, and then do a little bit of trading just to keep yourself kind of engaged and in the system.
And are you seeing some interesting projects and some interesting companies and opportunities? I know you mentioned, you've launched this blockchain fund in China. Are there other opportunities on the horizon, other things that you're looking at?
Yeah, so the China's big, and when it comes to blockchain, I mean, China has almost 3 times the amount of patents that any U.S. companies have entirely. They're as a government, they're all in on blockchain. They've, it's part of their 5-year economic plan that they do every 5 years, and it's riddled with blockchain. Even the president of China has said that he thinks it could be 10 times bigger than the internet even. So we like to focus on China.
Does Trump even know what the blockchain is?
Yeah, it's unlikely. But then I think also where we're kind of headed, and so that's where we have those exchange traded funds that are really focused. But then on the crypto side, I think there's a lot of really interesting projects. Like as I mentioned, we invested in that Telegram because we think that there's, you're already seeing a huge network now, and very smart people who created this application. For the audience that doesn't know Telegram is like WeChat or WhatsApp. It's a messaging app, and this was created by Pavel and Nikolai Durov, who had already created a social enterprise system, the VK, which is like the Facebook of Russia, and built that to a massive. It was bigger than Facebook actually before they kind of got ran out of it, and then they created Telegram, and now they're building this what could be kind of this next generation blockchain for all those users. They have about 200 million users on the system. So I think that's a really interesting one to watch. That's not public yet. There's no public ICO market for it, but I think we should definitely keep our eyes on it. EOS and Cardano, these are 2 kind of next generation blockchains competing with Ethereum and kind of on a smart contract basis. What we have is this awesome technology potential, but we have a lot of scaling issues and a lot of other problems. But that's no different than TCP/IP or Ethernet. And like everybody said, there's no way you can ever do video over TCP/IP, and there's no way you can ever do audio. And we figure it out. We're pretty smart as a society, and so we figure things out. And that's exactly what we'll do with blockchain.
And on that point, there's a lot of when the internet was first starting to get, voice over IP, I mean, that was a huge 10, 15 year process to get it secure and working properly and scalable. Like that was not an easy accomplishment. I mean, even YouTube took, that was another 10, 15 years to reach critical mass. So, blockchain is in its early days. We're in the infancy of this new emerging technology. So, it could be a little while before we see the same kind of scalability and the same kind of performance that we're used to seeing out of centralized systems. But the benefits of these decentralized systems, that's going to be huge, because we're going to have functionality that just isn't available for centralized systems today. So, being able to decentralize is going to open the door to data transparency, governance, open a whole new branch of opportunities.
Yeah, if you knew just how many, so we run almost $300 million of assets in our in our funds, and we're very tech savvy, and as an industry, every night we have to show the holdings of all of our funds, and we get this information from indexes and using like State Street and Bank of New York, like all these major custodians. And you know how we do it all is through Excel spreadsheets and email. It's ridiculous, right? We're sending emails back and forth with these Excel spreadsheets and then posting them onto websites when, and paying hundreds of thousands of dollars to these banks and custodians who, are just like in the dark ages when it comes to technology. That could all be solved with a blockchain, and the customer can benefit so greatly. And by customer, I mean like our clients who are, we wouldn't have to charge hardly any of the fees that we have to charge, just because it's all going to these custodians, like I say, that are kind of in these dark ages in terms of technology. But like you say, it takes a while. It takes a long time to figure out how to get that technology working and cranking to where, everyone can access it and really take advantage of that technology.
This is money over IP, like over, like just like there, like I said, just like we had voice over IP, this is money over IP.
Yep.
So blockchain is just simply the infrastructure play to help make that happen. Because, I'm 31 and I'm a millennial. So like, I'm looking at the younger generation that's playing Fortnite and using V-Bucks and like, they're already in game. They're using these virtual currencies in games already. And that's a thing. So, they're used to that on demand, I go to a marketplace, I buy this, I get that, they're not used to having to use fax machines or, sending to regulatory bodies and waiting months to get a response. And, some of the processes that are in place in the current system, the next generation does not understand or want to play that game. Their world's all digital. So, we need to create solutions that are going to enable the next generation to be able to make investments, to be able to do these things on a instant basis almost, and reduce some of those fees and barriers to entry. There's definitely an opportunity there because the market's huge.
Yeah, and so many other things too, like healthcare, like pharmaceuticals. Yes. So if a doctor issues a OxyContin prescription, and somebody takes that prescription and copies it 3 times and goes into 3 different pharmacies, the beauty of blockchain is that there's only one copy, right? There's only one, that identity can only have one OxyContin prescription, and as soon as it's filled, and all those pharmacies could talk to everyone, and the doctors and the healthcare companies, and I mean it just cuts down on so much just inefficiencies and waste and fraud, and just makes us a better society. There's just so many other things. There's also downsides to certain things, like from a privacy perspective, and it's watching these things, like if that becomes the next thing, then how much Big Brother do we get, right? In terms of doing what we want. But I still feel like you got to keep it open. You got to keep it open source, just like the internet. Closed system just is never better.
And in some ways, you can have more privacy actually with the blockchain. So like I talked to an AI company recently. They're building a personalized AI like assistant that writes the data privately to a blockchain. So instead of your data going to Amazon or Apple or Google, it goes to a blockchain where you have the private key for that data. So there are ways that you can actually still use blockchain to actually provide extra layers of privacy and permissioning and security. And it doesn't just have to be fully about transparency. It can also be about privacy as well. So,
well, yeah, that's just it. Even in that example that I gave of the prescription, they don't know it's my prescription. They just know that it's this public key's prescription, right? And so you have that's the beauty, is I don't have to tell this doctor and that pharmacy and that I don't want anyone to know that about this prescription, and I don't need to anymore, because there's no people on the other side. They just know that there's one, right? There can only be one transaction for that prescription. Right?
And do you have any final thoughts before we wrap up? And where can people find you?
Yeah, so so it's Eric Ervin at realityshares.com, and then they can find me on Twitter at @ervin, and then investinthechain.com is a good, just overall kind of educational website about a lot of our different blockchain related investments and things along those lines. So yeah, it was great being on the show. I really appreciate it.
Yeah, no, thank you for coming on, and I'd love to have you back on after you get some of your new products out.
Totally. Yep. Good talking to you.
Awesome. Well, thank you for coming on.